So what we're going to start on is the panel portion of this track. And this track is about empowering SMEs and entrepreneurs. And we've gathered a group of experts, people from different backgrounds, people from different parts of the world, to discuss about, give insights on how in their organization or in their regions, they are empowering the SMEs and the entrepreneurs. And following this panel session is we're going to go into breakout rooms. And several of you have, all of you have indicated interest in some of those breakouts. They'll be in the rooms downstairs. You just have to look at the sign to see if that's the one you want to go into. But in those sessions, we're going to delve deeper into the concepts of empowering SMEs and entrepreneurs. And like one of them is going global. Another one of them is large companies working with entrepreneurs. Does it really work? And then there's one on financing. So let's start with the expert panel. I'd like to introduce Roxanne Varza. She, right now, she is a global editor, and she writes very interesting perspectives on the entrepreneurial community. And she right now is a director in Startup Camp. And previous to that, she was with TechCrunch Europe. And she wouldn't tell me if she really left with Michael Herrington or not. So, so one thing about Roxanne is that she actually is from the Bay Area, from San Francisco, and she came to Europe because she loved France. And then in addition to finding that she loved France, she also fell in love with entrepreneurship and innovation. So I would like to turn it over to her, and she can introduce the other panelists on this panel. Thank you.
Super, thank you. Wow, that was a great intro. So I'm actually going to ask all the panelists to come up so we can get started. So they gave me a really giant topic, actually. Empowering SMEs covers like the whole spectrum of everything in entrepreneurship. So hopefully we're going to talk about not just how we're currently helping entrepreneurs, but also what we can do to make the current system better. We have 4 microphones. We're going to share them. So I'm going to just let everybody briefly introduce themselves and their activities. I want to start with Jean-Marc, who's with British Telecom first, because I think unlike the other people on this panel, he's neither a VC, nor is he the chairman of the EVCA, nor is he a lawyer. It's maybe a little bit less obvious how you're helping entrepreneurs. So if you can introduce your role and just say very briefly what you do at BT.
Thank you. So Jean-Marc Frangos, BT, large telecommunications operator in the UK, but also global. Clearly a lot of interest in innovation, a lot of interest in partnering with open innovation and with entrepreneurs. My role specifically is about that. My role is to find new technologies and entrepreneurs and connect them in the right places in a large organization, which can either consume the technologies or go to market in partnership with entrepreneurs. So it's both the consuming it and potentially being a channel into different markets.
Great, thank you. And now if I can if we can pass the microphone over to Jean-David, who's with a rather interesting fund. It's one of the few early stage funds in France, and it has a very interesting format. So if you can also just tell us briefly how you guys are structured and who you guys are working with.
Okay, so I'm Jean-David Chamboredon. I'm the CEO of a new fund called ISAI. When I say new, we are 17 months old. Basically, the format of ISAI is an entrepreneurs fund, meaning that our LPs are successful entrepreneurs, and we have 70 of them who have invested in the fund. And the format, beyond that particularity, which is clearly a big differentiator, is very similar to what is called micro VC, meaning that we do like VCs, but we do that earlier than VCs with smaller amount than the regular VCs. And obviously, because we are an entrepreneur fund, we are quite entrepreneur friendly.
Great. And now if I can actually have Karsten, who's also in the venture space. He wears 2 hats, actually. So if you can talk to us not just about investing, but also how you're working with the EVCA.
Sure, thank you. Yeah, thanks for having me here. Yeah, I'm Karsten Langer. I'm a partner with the Riverside Company, which is a mid-market private equity and growth capital firm. So we invest in small and medium-sized companies. And then, as you said, I am this year, since last June, the rotating chairman of the European Private Equity and Venture Capital Association, or the EVCA. So in the first role with Riverside, I really focus on, I think, slightly bigger companies than most people here otherwise get involved with. Companies that already have revenues and earnings and profits and so on. But in my role for the EVCA, it's very much defending the interests of the whole industry, really.
Great. And you're based in?
I'm based in Brussels.
Great, thank you. And so now we'll pass it over to Boon, who is the representative for Asia on the panel and working essentially with companies going from the Valley to Asia and investing and doing a number of different things. So if you can talk just very briefly about what you're doing.
Okay, I'm the managing partner for iGlobe Partners. The fund was started about 12 years ago by myself and my other partners. So the way we are positioned is today we run 3 funds. Our first fund was a US fund, mainly focused in Silicon Valley, startup company, helping company to go to Asia, and also European company to go to Asia. The second fund was a joint venture fund with the New Zealand government. So basically, it's a joint venture fund. So I helped the New Zealand government to organize a team and basically sit on the investment committee, but not run the fund. So the whole idea is to help startup company in New Zealand to go global. So actually, we are more a global VC. The third fund is Asia Fund, which is in growth capital. So we reverse the other order. We're helping Asian company to go to US and Europe, and also helping US European company to come to Asia. And that's our positioning.
Great. And finally, I'm going to have John, who is based in Silicon Valley. Just explain, you're a lawyer, so it's maybe obvious to everybody how you're helping, but just to kind of really outline how you're working with different entrepreneurs.
Thank you. My name's John Bautista. I'm a partner at Orrick in Silicon Valley. We're a worldwide firm. We've got 1,200 lawyers. Actually, Paris is our 4th largest office. We have 120 people here, which is a good reason for me to come back and forth. But we work with companies. We have about 1,000 companies that we work with. Facebook chose us as their first law firm. Yahoo chose us as their first law firm. We're working with Fisker in the new auto space. We have a number of companies that we've brought to the public markets. Just recently, Sequence, which is a French company, first French IPO in the US in 10 years, listed on the New York Stock Exchange. We brought that company public. We're all about helping companies get formed and getting financed, and as well as a liquidity event. I think this year we've sold 2 companies to Google, 2 to Facebook, 1 to Twitter, just closed a deal this morning to LinkedIn, and 2 to Salesforce. So there's a lot of activity going on in the M&A side, and our role is to help structure those deals for companies.
The journalist in me has to ask who you sold to LinkedIn.
We haven't announced it yet.
I know you haven't. All right, so you actually led into the first question very nicely. You worked with Sequence, a huge IPO for a French company in the US. Can you talk a little bit about your personal experience with that?
Well, it was a unique transaction because up until this point, there hadn't been a French company that went public in the US. And what's unique about Sequence is that it remained a French company. It was a Société Anonyme. It was not a Delaware corporation. So there was a big question as to whether or not the public markets would receive a company with headquarters in France, with a French management team, most of its employees in France, and French structure. So one of the challenges was to make the company and its corporate structure as much like a Delaware corporation as possible. And that took some time, but in fact, we were able to do that with the board structure, the option plan structure, and other structures that were needed for the company. So it is listed now, went public in April, and on a traditional IPO cycle, UBS were the lead bankers in that IPO. But I think it's a good signal, I think, for the European market that you can have a European company headquartered in the US, in Europe, seeking capital in the U.S., in a U.S. market, yet still remain in U.S. and in Europe, rather, and create jobs in Europe. So I think it's something that, particularly on the French side, the French government should be very, should see as an example of how you can retain technology companies in Europe, but seek capital outside of Europe and primarily in the U.S. And the other good part of that story is that there is a market in the U.S. among U.S. investors for European technology companies.
Great. So while it's actually a very good opportunity for European companies to have that possibility to go public in the US or to even get acquired, people are always saying that the exit opportunities in Europe are very, very limited. Can I have one of the European investors maybe comment on that? Maybe we can start with Jean-David. You see a lot of early stage companies, you're working with a lot of successful entrepreneurs. Do you feel that that's true? Are exit opportunities here limited? And if so, why is that the case?
Well, the European exit market is not that attractive if you look at it with a pure European-centric point of view, meaning that being a small cap on a European stock exchange is very tough. And finding acquirers that are ready to pay the right price in Europe is very difficult. So it means that if you are a VC in Europe, you are thinking about two favorite exit scenarios, which are A, selling to a US or Japanese or South African company, or B, giving, let's say, the mic to a private equity company that will manage the next season when after you exit. So that's basically it. And I think clearly one of the main talent of the European VC is to be able to build companies that are attractive to international buyers. And we are probably better than the American VCs to do that because most of American startups are bought by US companies. And that's basically what we are working on.
And Karsten, did you want to add to that?
Yeah, just really make the point that Europe, I agree with what was said here, but I think Europe also faces a challenge in the venture capital world itself, which is that Europe is not very good at providing large rounds of financing to growing startup companies. And so in Europe, you're more likely to see a corporate exit, an exit to a corporate earlier than in the US. And I think that's one of the reasons why Europe doesn't have the large flagship venture capital successes that the US can boast.
And why does Europe struggle with providing a large round of funding?
I think it's in the work that we've done, it's sort of either a virtuous circle or a vicious circle. And I think for the last few years, it has been a very difficult circle, frankly. You need good exits to attract LPs, to attract money to the industry. And right now, there is a declining number of LPs in Europe that are ready and willing to put their money into European venture. And that is a fact that is clearly hurting the ability of the industry to attract capital.
Yeah, clearly the European VC industry is shrinking. There is no doubt about that. And there are very limited amount of money that is available from institutional LPs in Europe. You could think about it and cry, or you could say, let's try to build trust. And what the European VCs are good at is to build great companies with little money, meaning with good money multiples. And we need to continue to deliver that, create trust, and then probably the next step would be larger amount of money available to startups.
Do you have any examples that come to mind?
If you look at the big internet successes in France, most of them raise very little money. Mythic raised 7 million, Price Minister less than 10 million, Sologer less than 10 million. Vente Privée never raised money. So we are good at building companies without money.
Great. And maybe I can ask Boon actually to comment on how this compares to the situation in Asia. Jean-David mentioned Japan earlier. I know that you have maybe more experience with China and Singapore. Are they looking similarly to European companies at going for an exit in the States? Is the situation different?
I want to follow up with your comment earlier on. I think there are little capital in Europe, and that's the good news and the bad news. That's actually good news for me because we co-invest with European investors as well. I think the whole idea is that European company always think that the next stop is actually in the US, but there are very few successful European company. So my own experience is, I have invested in selected European company and bring them to Asia. And Asia is actually a marketplace. Asia is not a technology place. It's not a technology innovation place. So if you can hit, either Japan, Korea, China, this major market, then you can actually go for listing in the public stock market. So my own experience is I was earlier invested in SEM Microsystem. So we're the first German company that did the public both dual listing in the NASDAQ and the New York. I co-invested in my earlier fund with TVM. So I think that experience is a very good experience. So we should start thinking about syndication among territory. The difficulty with European fund is that your LP basically define your territory, meaning that they say, I want you to invest in Europe. So therefore, the European VC cannot invest outside. So it becomes very difficult. You're locked in for the next 10 years. So whereas if with our fund, with iGlobe, we basically try to take the gap, the market niche. So that's why selectively we want to help entrepreneur to go beyond their national boundary. And that's not an easy thing to do, but it requires a lot of hands-on experience of how do you do recruitment if you go to Asia, or if the Asia company go to US and Europe, how do you actually help them to do the recruitment? And that become a very valuable skill sets for venture fund, because if you just use money to just bid for it, then it's very expensive. The investor cannot get the kind of return that we want.
Great. So we'll come back to some of the specifics of internationalization later on in the panel. But just to touch once again on the exit opportunities for Asian companies, did you feel that they actually look to the States, do they look to Europe, do they look outside, or are they looking at home?
I believe that in Asia, except for China, a lot of B2C business is much more easier to go for NASDAQ for listing or Hong Kong for listing. Whereas in smaller countries like Singapore or, like Singapore, I think it's more M&A opportunity. And in fact, I will encourage most entrepreneurs to do M&A, because then you can use little capital and build a dominant position. So for foreign buyer, whether US or European buyer who come in, it's actually a decision of build or buy. So that is much easier. And for VC, it's actually easier to get out.
Great. And now to turn it over to BT. Obviously, you guys are maybe somewhat less implicated in the exit strategy, or maybe you're not. I know that you guys are looking at working very closely with bringing the different technologies to a new market. Are you also, does that integrate somehow into an acquisition strategy?
So less so for us, because you have to bear in mind that we're a service company. A telecommunications company is majoritarily a service company. We actually don't need to own exclusively technology that much. So we're much more of an integrator of technology than we are an inventor of technology. We have some inventions which are related to our processes, our savoir-faire, our ways of deploying networks. But we typically like to partner with companies, and the sort of deals we do, I'm effectively a corporate VC in a way, but I very rarely invest in companies. What I do most of the time is business development with companies. So it's more about getting access. I mean, it was a debate we had just before the break, which was all about openness and getting access to things rather than try and capture the value for ourselves. We don't participate very often in exits. It's very rare, actually. I mean, the cases where we would invest in companies is more in the process of trying to acquire channels to markets where it would take us more time to build the channels to a new market, particularly in the enterprise space. But largely in terms of the access to technology, it is about finding the technologies and being able to bake them into a portfolio of services and distribute them to various markets around the globe.
Great. So maybe just to kind of paint a very clear picture, you can outline how you guys have worked with OnLive to bring them to the UK?
Right. Yes. So that's a good example. So this is we're building a very large fibre network in the UK. We're investing about £2.5 billion, which is a significant investment over 5 years to build one of the largest fibre footprints in Europe. Of course, what you need when you have set up this capillary network of high density and a lot of bandwidth, you need applications, right? You need ways that people can use that bandwidth, which makes a difference compared to DSL, of course, because you can do a lot of things already on DSL. What else can you do on fiber? And gaming is an excellent example, but when you think of gaming and the way it's done today with console games, you actually don't need that much bandwidth when you play against someone else in a console game, because you just transmit very, very few bits and pieces of packets just for orders up and down and shoot. OnLive is a very different model to the existing gaming industry. They run the games on their data servers. So it's actually run as a cloud gaming company, and it's a cloud model. So the games don't run in the console that you have at home. In fact, at home, you simply have your broadband, typically fiber line, and you have a very small decoding box on which you plug your controllers. And what happens is you can therefore play on a game that is resident in the network. So we partner with them. That was actually a very quick partnership. We did the whole process of diligence of deciding we were going to do something with OnLive in about 7 weeks, which is quite fast given the complexity of the technology behind it. And AT&T also have got a similar partnership. So we are the partner for the UK, and we've launched actually OnLive last month in the UK market, and AT&T are doing the same in the US. So that's an example where we bring technology and new small, medium enterprises into a different market by a partnership which does not necessarily include capital or equity.
And how are you finding these companies? Are you actually going out and scouting for them? Are they coming to you? What's the process?
Yeah, a bit of both. So we go out scouting for them proactively, I would say, in specific areas where we know we have gaps in our portfolio. But we also have been now in the valley for about 12 years. So we have a constant inflow of companies coming to us with a bit like they do with VCs with business cases, and we look at it under a slightly different angle, which is that of the partnership and the business development. I also have a team that's scouting Israel, because we see a lot of particularly security technologies in Israel that are really relevant for us in our corporate market and delivering corporate security solutions. We scout also in Asia, and we find that Korea, Taiwan, Japan also have a lot of interesting technologies. Sometimes for network acceleration, sometimes for security, sometimes for mobility apps and tool sets. So we scan across the globe, and there's a bit of a push and a bit of a pull.
Great. So now to kind of pass it back to Karsten to comment, maybe, you brought up, for example, that BT doesn't really have a very aggressive acquisition strategy or culture. I think a lot of the companies, larger companies in Europe, maybe if we compare them to their US equivalents, don't. Do you think that's a concern of the EVCA? Are there different concerns that take precedence? What's kind of the main focus or the issues that the organization is focusing on?
Well, the likes of BT really are an exit opportunity for most of the members of the EVCA. So in other words, small companies might exit to a corporate like BT or another. Right now, the biggest concerns of the industry, if you like, really are what I mentioned before. There's and this comes back to the economic times that we find ourselves in, and the regulatory drive that is a result of that. Right now, Europe and really the world as a whole finds itself in a very, very difficult and dangerous situation. I mean, we sit here and it's week after week, and we hear about Greece and another story about Greece, and there's really no resolution. And so the markets are gyrating, are not trusting anyone anymore, and the problems are escalating. This has a direct impact on our abilities to get financing with banks and other institutions, and so that has an impact on the economy. At the end of the day, growth comes from entrepreneurial activity. And so I think our politicians have to be smart enough to understand that supporting growth and supporting entrepreneurial activity is the way out of the crisis that we're in. That is, in fact, the biggest concern that we're wrestling with at the moment. As you know, since the 2008 crash, there was a lot of regulation that's been imposed, both in the US and in Europe as well, on the private equity and the venture capital industries, which has the effect, when you take all of those regulatory measures together, they have the effect of sucking liquidity out of the market. All lenders, essentially all providers of capital, essentially have to shrink their balance sheets. So there's less money available. It becomes more expensive to invest in risk-type investments. If you're an insurance company, you have to hold more capital against your investment in private equity than an investment in a public bond or something like that. So that risk that the regulation will drive a sucking out of liquidity for industries like ours is our biggest concern at the moment, and that's where most of our energy goes into.
Great. John, do you want to give an American and a legal perspective on that?
So, one of the interesting trends that's occurring in the U.S. and Silicon Valley is the number of sheer startups that are being formed, the fact that they don't need a whole lot of capital, but companies that can get formed on $250,000 to $500,000, and the incubators and angel communities in the Valley that are supporting these companies. For example, Y Combinator, Paul Graham's group, generates 60 to 70 companies every 6 months, so it's 120 companies. And companies like Airbnb came out of that. Box.net came out of that. Heroku, which was one of my clients in the cloud space, which we sold to Salesforce last year for $250 million, came out of Y Combinator. There's other incubators such as 500 Startups and others. But I think that's a model that would be helpful in the European market to build communities around incubators, advisors, and angel investors. Ultimately, you need the fuel to put in the gas tank of these companies to get them started. And a trend that I see that I think is dangerous for Europe in particular is the number of European entrepreneurs that are moving to Silicon Valley in order to get there, just to get $100,000. Only to get $100,000, they're moving to the Valley. And of the companies at Y Combinator, I work pretty closely with this group, and about 40% of those companies have European founders. So it's something that I think to be aware of, that it doesn't take much to fuel innovation, but where there is the fuel, that's where the entrepreneurs are going.
Great. I'll let Jean-David comment on that.
Two comments. The first thing is when we defined the ISAI mandate, we didn't say we will invest in French companies, but we said we will back French founders wherever they are. So we are ready to back founders in Silicon Valley or in Shanghai or in Barcelona, because we think being close to the entrepreneurs when you are an early stage investor is very important, and obviously sharing the same culture is important, but location doesn't matter. If it's better for a company to be in the Bay Area, it's better. Okay, so that's first point. Second, if you look at the angel community, 10 years ago or 5 years ago in Europe, especially in continental Europe, and if you look at it now, the improvement is huge. Obviously, it's still tiny compared to what it is in Northern California, but it has improved a lot, and there are, at least 3 or 4 entrepreneurs fund in France that did not exist 2 years ago that are now active investors. You see that in Germany, you see that in the UK. So I think the scene has improved a lot, has matured a lot. It's more I would say the further financing means that are threatened by regulation than the early stage one.
Karsten?
Yeah, no, I would just echo that and also refer back to Daniela's chart at the very beginning, which showed that, in fact, the countries that have the best climate for innovation are small countries in Europe and small countries in Asia. Those were essentially all the countries on your list, right? So although the US is what we always look to as having the best innovation, in fact, that was a very interesting analysis which showed that, in fact, Europe does have this innovation, and it doesn't take that much. To comment on something that was said earlier, what works very well in Europe, just like it does in the US, is clusters. when you can get clusters of people together, either around a university or around some, and you know, the U.S. has the Valley and Boston and a few other. Europe has many more, and they are smaller, but they are equally successful at a smaller scale. And I think supporting those and trying to grow those should be a key, you know, policy effort and effort of people who provide money to these communities.
Do we struggle because every European nation wants to have their own tech hotspot and they're all competing against each other?
No doubt. You know, politicians get elected by the people in their countries, and I think that's something we have to live with as Europeans.
Okay, and now just to jump back onto the Y Combinator, there are actually some local equivalents in Europe, and I was working for one, so I'm trying to be as neutral as possible and not offend the people that I used to work for in asking this question. But a lot of people actually criticize the kind of European accelerator bubble that's happening because they argue that the mentors that we have here are not the same caliber. We don't have as many successful entrepreneurs that can mentor startups, and that ultimately also the funds available, we have a lot fewer seed funds and fewer angels. I wanted to ask Jean-David to maybe comment on, I mean, I imagine that you've looked at some of the startups that have come out of programs like Le Camping or I don't know what. What is your first reaction?
The first reaction is that it's very, very refreshing to visit such places, see young teams, very creative, willing to set up very ambitious businesses. Okay, so it's very refreshing. Is it realistic? Most of the time, it's not, because you know the money won't be available or the project is not that viable and so on. But it's very refreshing to see that. Out of this energy, will some companies will be successful, but by definition, it's 1 out of 10, 1 out of 20. I don't know. And you know, European people, they don't like failure, and you know, we were together at the Failconf. This acceptation of failure is something that we need to learn about and accept the fact that if at Le Camping there are 12 companies, maybe only one of them will be really funded and really a success.
Okay. And if I ask you if you think we need more funds like Kima, for example, that's doing, they say to do 100 investments per year that are up to 500K. It's kind of like a spray and pray method. Do we need more of that in Europe? Yep. Or anybody?
Sure, we need a lot of Kimas. No, you know, for me, a company that has been funded somehow by Kima, even if it's a small amount of money, is a good prospect for my deal flow. So the better deal flow I have, the better I am. So obviously, we are missing some Kimas.
Great. Did you want to follow up?
I want to say yes, and you need the follow-on capital pretty quickly because these companies are growing very quickly. So, you know, you put a little bit of gas in the tank, but eventually you're going to have to strap the rocket boosters on there. And you need the larger venture funds to fund the company. If you're looking for a European venture fund, that's fine. One of the important due diligence items on the European fund is to be sure that they can invest in the company ultimately if it does go to the U.S. You don't want to be strapped down because your first investor can't follow on if it ends up taking capital from a U.S. investor down the road. Otherwise, it gets very complicated to do the follow-on financing. And second is to look for a European investor who has good contacts in the U.S. or wherever you're headed for future financing to provide that bridge to capital. But it's great to spray and pray, but you know, you need to have the path to larger rounds of financing.
Great. So, Karsten, we're going to come back to you and the EVCA again. You said earlier that some of the regulations have made it difficult to be an investor and that it's kind of sucked out of some of the liquidity from the market. But how about from an entrepreneur's perspective? I think Europe isn't always regarded as the most entrepreneur-friendly environment. Do you have any comments on that?
Well, I do. Europe, I think, actually does have most of the characteristics that are necessary to be successful.
Can you outline them a little bit?
As entrepreneurs, you know, we live under the rule of law. We do have access to capital. Yes, we lack the ability to do big rounds and so on. We do have a large home market, relatively speaking. We do have innovation, as we talked about earlier. We do have good management teams for small and medium-sized companies. So I think Europe does have a lot of the basic infrastructure or material that's necessary to create innovation. And I actually think it is happening. We just don't have the as I said earlier, the large blockbuster exit, because they typically tend to exit to a corporate buyer or someone like that before they get to that stage. And so a Google or a Microsoft is less likely to occur in Europe, but there's lots of innovation underneath and companies that get sold into those larger corporates. So I guess I'm an optimist by nature, but I'm certainly not. I don't think it's a huge problem.
Okay, so I guess the one issue that you kind of agreed with me on earlier was then fragmentation. Do you see companies getting around this? Do you see anything really innovative going on in how they actually combat the problem that Europe is 1,000 times more fragmented than the States?
I think it depends very much which sector you're in. I think it's easier to go global in technology. It's less easy in, let's say, healthcare services, where you're more dependent on local and national law. So I think, and I guess where you have seen big successes, take Skype, for example, or they are typically on the technology side. So I think it's going to be sector-specific or sector-dependent.
Subun, you're shaking your head. Do you want to comment on that as well?
I think I share some experience and scenario on China side and also Singapore side. In China, there are less incubators, but those incubators currently are doing well because there's a lot of VCs who are a bit lazy and they want to take lesser risk. So the incubators, basically now they're enjoying actually good step up in valuation. So before the Series A, the step-up valuation, if it's funded by Series A people, it could be 5 to 10 times the value. So you can imagine the incubators manager are actually doing a good business. So they will do well if they know when to sell out. So they have to sell out fast, but So I think in that class could do quite well because there's excess capital right now in A and B and C in China. In the case of Singapore, the Singapore government has had a very open policy. So they are encouraging also foreign incubators coming into Singapore to set up the operation. And the government is also doing the matching. Not a whole lot of money, like 10 million. They will fund 85% of the incubators. The whole idea is that there's a lot of foreign entrepreneur actually coming to Singapore to set up operation, particularly the French, because we have the INSEAD campus in Singapore, and that has been very successful. So many INSEAD students basically started their own business, headquartered in Singapore, and they could be going back to India or go to China, with their own friends, their own classmates. So I've seen a couple of successes there as well.
And why would Singapore be a good place to start a company?
Not that it's a good place to start a company, but they are just, they're just friendly. So in immigration, because they don't have a lot of technology-based people, so by the fact that they are open to, they are not a whole lot. I mean, Singapore is just only 5 million population, right? So if you want to have a lot of entrepreneurs, there are not a whole lot of entrepreneurs. So if you import entrepreneur in that sense, by showing them that there's money there in the early stage funding, but of course later on for expansion capital, if it's in technology area, then they can go to US or back to Europe or go to China, and that can be quite successful as well.
Great. So, John, Subun mentioned just briefly right now that we have some lazy VCs in Asia. Apparently we have lacking VCs in Europe. But you have also mentioned that you've worked with companies to actually raise funding in the US. But are entrepreneurs getting too greedy? Are they delusional? Are they going after too much money, too little money? What do you see happening?
There is a lot of capital available for companies, and the companies who are sort of the leading companies in their space are raising a lot of capital. There is a danger in raising too much money. On the other hand, which is if you raise too much money, you build too fast a team, you take on too many obligations before you've proven the service or the product that you are bringing to market, it can have bad effects for the company in the long run if you don't achieve your milestones. When you bring in venture capital and you raise $10 million at a $20 million pre-money valuation, your next round of financing better be at in excess of $50 or $60 million. And in order to raise money at those valuations, you'll need to have real milestones, real revenue targets, real user targets. It can no longer be a fancy or a dream or based on projections. So what a lot of companies have done is they've raised too much money and then they find it difficult to go for their next round of financing. CEO gets replaced, who was the founder of the company, employee morale is in decline, and then you've got a problem. So I think there is the risk of taking too much money in the Valley. So that's something that needs to be carefully done. But with the right investors and the right plan, it's kind of a nice luxury to have. But I would just not take more capital than you realistically need, and be very careful what the valuation is and what the next milestones are to get to funding.
Yeah, in fact, I've got a question for you, John, about the Silicon Valley-based VC community. We see, because we read TechCrunch, all this fundraise, the $20 million round for a company having 6 months of existence and a product without any business model. And obviously, we don't see that happening in Paris because we don't have the money, but probably because we don't have the entrepreneurs willing to do that. I don't know. But my question is it easy to raise a VC fund in the US now? Because that's a big question. If you look at the statistics, 80% of the profit of the VC industry are coming out of 2% of the deals. Obviously, each entrepreneur can think he's part of this 2%, but all the VCs are not part of this 2%. So is it easy to raise a fund?
Are you speaking from the perspective of the company or the venture?
No, the venture firm raising a fund, because there are plenty of VC firms in the US.
The answer is no. I mean, a lot of funds are having trouble closing their next round of fundraising from their limited partners. And I mean, just recently, a very well-known top fund really struggled to raise the $1 billion that they wanted in their fund, so they had to cut that back. But no, I think that is the point you raise is an important point, which is VC returns are on the decline, and only a certain top-tier number of funds are getting the returns. And so the rest of the industry, there will continue to be and there has been, over the last 5 years, fallout in the VC environment. One of the other things is that while the VCs have sort of dropped in number, the angels have increased in number. So you have a number of super angels, which are institutional angel funds, that are willing to put the $1 to $2 million of capital in that used to be too small amount of capital for a VC. And they are providing a lot of the funding around the companies, and still on that amount of capital, able to grow those companies into sizable companies. So the VC community is getting squeezed at both ends, the increase of the angels and the fact that it's harder to find good opportunities to put the $10 to $20 million of capital to work.
All right, well, I had like a whole bunch of other questions lined up, but I was just informed we're out of time. I would hate if you guys in the audience didn't get to ask your questions, though, so I think we have some time for just a few. But can I first get an amazing round of applause for our great speakers? Thank you. All right, so I will just come and throw the mic in your face, I guess. If you could introduce yourself, ask a question, don't sell anything when you ask your question. Do you want to stand up? Are you asking someone specific?
I don't know who would answer it, but I guess I'm just so confused because if I listen to this, I think, oh my God, I should get the hell out of Europe. But it seems to be great here. I was talking to a German entrepreneur today, and the government's handing out $500,000 checks for 10% if you're an innovative companies. So I'm just confused as to where this lack of money is coming from.
So you have raised in Europe.
Sorry?
You have raised in Europe.
Yes, twice.
And you found it easy.
Relatively, compared to Boulder. I mean, in Boulder, there's like 3 investors and 200 people trying to get it.
That is great to hear.
There's no good companies. So.
Great. Well, thank you for sharing. Do we have a question from the audience? There is not a response other than good job. We're very impressed. Send us not only your business plan, but also your contact list.
I'd be happy to comment quickly on the.
Go ahead.
I'd be happy to comment quickly on the. Sorry, just one short comment on the availability of government funds. That is true that in Europe that there are a lot of, both at the EU level and at the national government level. It's a little bit of a maze, frankly, to find your way around, and you probably need to hire some different fundraising people than you would hire if you were going to speak to VC funds in the Valley. But it is possible to raise venture-type money from government, and it often comes with not many strings attached. So it can be indeed an interesting source.
But is it also somewhat lower quality because you don't get the VCs and whatnot behind it?
You don't get the angel, and you don't get the expertise of the past entrepreneur and so on. No.
Just a small joke about that, but the biggest business angel in Europe is the French unemployment agency, by far.
I'm sorry, go ahead.
Just a quick follow-up, because I escaped from the Valley and get money here in Europe as well. So I can share that sentiment a little bit. In Silicon Valley, we were too early with our product. Here, we got money from the government, and we're very happy starting and going back to Silicon Valley. Maybe we will be too late now, but anyway. My question is, do the VC lead or they follow now? Because it's like, whatever, we're talking about innovations, but you go with ideas and they say too early, too late, and they just follow the money. Is that true?
Who are you directing your question at?
Do VCs follow or they lead?
No, but is there someone on the panel that you'd like to ask that question to?
Because my impression is that they
I will attempt to answer your question. I think while VC evaluate the portfolio company on due diligence, you also have to evaluate the VC on due diligence. Yeah. That means you have to figure out whether they are always follower or they always lead. Or sometimes they lead and sometimes they follow. So you may want to ask them a question and say, okay, if I find a lead, would you want to follow? Then you know that he or she is not going to lead. Because sometimes they do have a lot of pipeline, and they will try to force rank that pipeline and figure out that which deal give them better opportunity and what are the deals they want to have certain, they just run out of bandwidth. So there could be, certain VC fund that they always cooperate with. So they just cannot do many things. So sometimes you just have to hit the right chemistry with certain partner. And if they believe in your vision, then they will do the lead. Otherwise, a lot of VCs, they are like sharks, they just circle. And the moment somebody lead, you find that the rest will just follow. So you just have to find the right VC.
If I may add something about that, I think the more money you have to deploy, the more difficult it is to take risk or apparent risk, by definition. So if you look at the large deals in the US for the last 18 months, a lot of them are buying posters, a guy putting 100 million on top of a $3 billion valuation. It's very easy to deploy money that way. Okay, the less money you have, the less follower you have to be.
Great. So unfortunately, we don't have time for any more questions, but hopefully you know who our panelists are. You can track them down, ask your questions later. I'm going to pass the mic back over to Gigi. Thanks to all of our great panelists.